Vonovia is one of the biggest losers in German DAX index in 2022. At the same time, analysts seem to love the stock that fell more than 50% within 1 year. For example, if we look at Seeking Alpha, it looks like this. The overall rating is very optimistic and saying that the risks are priced in already right now. On this channel, I would like to talk about all kinds of money matters. Today, I want to discuss the question, is Vonovia for me a buy or not? I do not have a monopoly on the truth. I'm just sharing my honest opinion. You can take this as the start for your own research. And we will also take a look at the numbers later. But before we do that, let's talk a bit about the company itself. Vonovia is the biggest real estate company in Germany and in Europe, has more than 550,000 properties in the year 2022, of which 90% are within Germany and the rest is in Sweden, Austria, France and the Netherlands. You can see a more detailed list here. For example, in Berlin they have 40,000 units, in Hamburg 20,000, in Munich 10,000 units. And what you can also do is you can make a small lookup, a small research for yourself. For example, you go to any German real estate website and try to find a condo or a house in Munich for 4,000 euros per square meter. So for me, those numbers, they don't look too high, they look quite conservative for me. The general reputation of Vonovia has not always been so good in the public eye because the company is seen as very capitalistic, and there have been some reports criticizing the company in dealing with tenants who cannot afford the rent or rental increases, etc. And also the German Tenant Association in the past has accused Vonovia of using tricks on calculating the ancillary costs. But that's basically also the same reason why Vonovia has always been seen as good among investors. They've always been seen as a very reliable company, taking care of their business with a strong commitment for investors and their dividend policy. Let's hear a statement from the CEO, Rolf Buch, on this.
This is the 9th time that we are reporting annual results in an industry which follows long-term trends and that is not measured by years or quarter, but on a long-term stability. Since the IPO, we have grown FFO and dividend per share with a 13% CAGR. NTA per share was up by a 17% CAGR. The total shareholder return was up by 15% per annum, or 7.5% organically if you ignore yield compression completely. And I see no reason why this should change in the future.
So far so good. Now let's take a look at the current situation and what we can expect for 2023. Just in November, Vonovia confirmed the forecast for the whole year 2022 and also a stable outlook for 2023. EBITDA went up 37% to 2.1 billion euros. Group FFO went up 35% to 1.6 billion euros. Those great numbers were mainly driven by the Deutsche Wohnen integration, but Vonovia also grew a few percent organically, like around about 3%. In 2022, the dividend payout for the fiscal year 21 was €1.66 per share, which is around about 77% of the FFO. So we can assume that based on Vonovia's own data, the next dividend might be paid out in May 23 for the fiscal year 22 and might be higher than the previous €1.66. The FFO, by the way, is used in real estate companies because real estates do not have a shelf life. An apartment building, for example, will be just as much of an asset in 10 years as it is today. In fact, it will probably increase in value over the time. Also, in the 9-month earnings, we can see that for the fiscal year 21, €1.66 was paid out, And for 22 and for the coming year 23, it is planned to pay out each 70% of FFO, while the rental revenue is expected to go up. So this would be the payouts in, for example, May 23 and May 24. So is the dividend secure? Well, at least from what Vonovia is telling us, it looks like the dividend is secure and will even increase in the next year.
Yeah, so the question was if disposals don't come through, as you sort of alluded, that transaction market is quite difficult. Would the next lever for you be to reduce the dividend to have a better cash flow position?
So I think we have said that the dividend several times, that our dividend policy is well known and it has not changed. So to repeat, we are paying around 70% of the group FFO, post minorities to be precise. And to be more formal, the management board and supervisory board will make a proposal in the end of Q1, beginning Q2, to the AGM. And formally, the AGMs or the shareholders decide the dividend. But I repeat, our dividend policy has not changed, and this is around 70% of FFO.
And please also recognize that what we have planned for and what is underlying the guidance is essentially only a portion of various processes we have initiated, which will free up cash. So again, that is excluding joint venture partnerships, and that is excluding nursing. And against that backdrop, I do feel very confident that we are able to free up some of the capital deployed. And against that backdrop, there is no need at this stage to speculate about the dividend. So we are very clear for now, the dividend, 70% of FFO post minorities, is what we are planning for.
I'd like to show you those numbers here. The fair value of the real estate portfolio is around about 100 billion euros. The net tangible assets are 50 billion for the whole company, or 62 euros per share. So basically the company is telling us here, everything the company owns minus all the debt is 50 billion euros or 62 euros per share. So Vonovia is telling us the price of one share should be around about 62 euros. Now let's talk a bit more concretely about the debt situation. They have around about 43 billion in debt, which 4 billion are due in 2023, 2024 and 2025 each. Those 43 billion are around 50 times their profit. That's not exactly low, but still okay in my opinion. That means if they pay back all of their current profit, all of the 2.8 billions, they need to do that for 15 years in order to be debt-free. The overall debt is one thing, but what is more interesting for me is the 4 billions they have to pay back in 2023. Here in the last webcast on this point.
Of course, the larger environment is currently challenging. Cost of capital is high, financial conditions are tough, and there is a high degree of uncertainty, which we even recognize if we talk to you. But we are adjusting to this challenging environment. We have ramped up our disposal efforts, and we are strengthening our free cash flow through significant reductions in our investment programs. This will give us options because results are usually never good if selling is your only option. We may see a small value decline in the magnitude of a lower single-digit percentage number in the fourth quarter. I don't think this would surprise many people, and if so, this will be a positive surprise. This kind of environment that may be expected. But that is a far cry from massive value declines that some market participants fear. Make no mistake, we continue to feel that it is important to free up capital and to reallocate it towards paying down debt. But we want to do so from a position of strength and with alternatives in order to achieve the best outcome.
Vonovia will start the coming year with 1.3 billion in cash and then has to pay back 4 billion during the year, which will basically be what they generate during the year by their running operations. Still, for me, this is the most concerning point. Including the money coming from operations, they have money available for around about 1 year of debt payment. The CEO is quite confident though, as we can hear here.
I think the key message is what we are guiding for in terms of free cash flow. Obviously, we have a plan as to how we want to achieve that. But even if we were to experience more difficulties in some of the elements, we have other elements to replace. Buzzword, our joint venture partnerships, and even more important in my view, the nursing business. So all in all, I feel very confident that we deliver on the targets we have repeatedly announced of delivering our balance sheet by roughly 3 billion euros next year.
In order to reduce debt, Vonovia plans to sell properties worth 13 billion euros over the next few years. And it's positive that they don't want to take on additional debt and they don't plan to do capital measurements because the stock price is quite low right now and therefore this would be quite costly. And by the way, selling units worth 13 billion euros, which is around about 66,000 condos, is quite little considering that Vonovia just swallowed Deutsche Wohnen, which has around about 150,000 properties. So all in all, they will still have accumulated net around about 100,000 units. Let's hear from the CEO a bit on the integration of Deutsche Wohnen.
On the internal revenues. I'm one page about Deutsche Wohnen integration. On page 9, we are progressing nicely in the integration of Deutsche Wohnen, and we are coming on to the final stretch. By January 1st, 2023, we will have all the operational and financial systems and processes integrated. Our recent bottom-up synergies, as I already mentioned, confirmed our initial assessment of 105 million EBITDA synergies and identified an additional 30 million, mostly in the value-add segment, and we aim to realize beyond 2024. This basically concludes the integration. So starting with the full year, I expect that you will see the Deutsche Wohnen number fully integrated into the group reporting. This will also be the way of how we manage the operational business. What that means is that in line what we have said and promised in the time of the acquisition, we have fully integrated a full-fledged DAX company with only 1 year, harmonizing operational and financial systems, processes, and reporting structures, and this without any noise in a very politically important city of Berlin. Let me now hand over to Philip. He will start with the segment results.
Thank you, Rolf. And moving to page 5, please. As you can see on the page, the high absolute growth in EBITDA and FFO was, of course, mainly driven by the inclusion of Deutsche Wohnen. But also, if you look on a standalone basis, you can see nice growth as well, 5.6% for segment revenues, 2.6% for adjusted EBITDA total. With year-end numbers, we will show the Deutsche Wohnen contribution in the relevant segments today, and to that extent, for the last time, we will have to show Deutsche Wohnen as a separate segment again. For the rental segment, you get a rough estimate if you combine the EBITDA rental and the EBITDA from Deutsche Wohnen on a pro forma basis, and that does not include much in terms of synergies yet. While the combined volume cannot be seen in the individual EBITDA segments, it's obviously very visible in the interest rate payments. They are higher because of the absolute debt volume as a result of acquiring Deutsche Wohnen. The increases you see in taxes was driven by the additional taxes of Deutsche Wohnen as well, as by the very high EBITDA contribution this year in our development segment.
I really like this page on the 9-month presentation. This shows us the units Vonovia has sold over the years. Just in 2022, 9 months, they sold already 18,000 units. And we can also see here that in 2014, after the acquisition of this company here, they also sold over 40,000 units the years after the acquisition. Of course, when you analyze a company, there are many relevant factors. For me, bottom line, the most important things are that on one hand, we see a high leverage company. The management is basically dealing with the next maturities coming in 23, more or less on the spot. Even though they may have options and a good diversification on the financial side, the market hates that. The market hates that there's just a rather small cash buffer. It hates the uncertainty. On the other hand, we have a great company, which is, from what we see in the given data, clearly undervalued. Basically, the management is telling us the real estate is worth 100 billion, the debt is 43 billion, which means, bottom line, one share should be priced at around about 62 euros. And that's already a quite careful approach. Oh, and the CEO and the CFO both bought quite big time for around about 5 million euros each. That's around half of the CEO's annual compensation. In my opinion, I believe the management can handle the current challenges. In my opinion, either Vonovia is a clear buy at the current price of 21 euros, or there must be more behind it than the given data shows us. What is my investment case? Vonovia is, for me, in the long run, a great secure company which is dedicated to pay a nice dividend, and from the current stock price I also expect a decent climb there. The risk is mainly the debt situation, on which, in my opinion, the market currently is overreacting. Thank you for watching. Bye bye.